Hey there, friend, and welcome back to Thomas Mayhew's Real Estate channel. In this episode, he will be interviewing Aaron Baaske, a distinguished expert in the insurance world. With a wealth of experience and industry insights, Aaron will share valuable perspectives that will not only broaden your understanding, but might just redefine the way that you look at insurance. Whether you're a seasoned expert or just starting to navigate the insurance landscape, this interview promises to be an enlightening journey. So, let's jump right in.
Hi, welcome to another episode here, and today we have a fun interview with Aaron Baaske with Lighthouse Insurance, and he's going to drop some knowledge bombs I think that will be very, very helpful. And I wanted to interview him because, well, I've known a lot of insurance agents because I'm a realtor for 15 years. But when I met with Aaron, I was profoundly impressed with his sincerity, his ethics, just a number of those boxes you like to check when you're thinking about referring somebody to your precious clients. And so Aaron checked all those boxes. And with that, Aaron, could you introduce yourself and just tell us a little bit about your background?
I appreciate the opportunity, Tom. Yeah, my name is Aaron Baaske. I'm the co-owner of Lighthouse Insurance here in Lorain, Ohio, and actually started in insurance clear back in the year. I graduated in '88, so started actually right out of college in the insurance business, and then after about 3 years of insurance, then I went into the real estate business and was a real estate appraiser for 24 years, and then come back in 2014 back into the insurance business. So full circle.
Sure. Which type of person should be reaching out to you basically at the end of the day as well?
It's a good question. I think for us, one of the things we've spent a lot of time on is trying to find out what is the target, for us? What is the specialty, and really who do we serve best? And we call it the risk management business. So that's kind of what we do, is help people manage risk, the risk of life. Things happen, but we don't want to be financially devastated from that risk. So if it's a storm or, God forbid, a car accident or something like that, we want to try to take what we can financially to help right that situation. So really the perfect client for us is one that is interested mostly in making sure that everything is done correctly, that their assets are protected, and that it's done with companies that they don't have to worry about. And a lot of times we have people that maybe aren't the perfect client. No offense to them, but they typically are only interested in price. So they will start out a conversation with, hey, I need car insurance, how much? Or I need homeowners insurance, how much? Or I need business insurance, which we also do, commercial lines business insurance for people too. But when the conversation starts that way, we usually start trying to vet whether or not it's going to be a good match, because again, it's your money. We're never going to tell you how to spend your money, obviously. But I also want to make sure it's a good match so that we aren't getting in the way of maybe that agent that's maybe better fitted for somebody that only wants price. So there are people that are just in a financial situation where they just need the cheapest insurance possible. And in those situations, a lot of times if we find out that that's really the only thing they're interested in is just price, we typically refer them to somebody else that's better qualified to handle just price. So a lot of times the funny thing is, Tom, is the price, when you look at the difference between doing it right and doing it on the cheap, on a percentage basis, it's really not much different. But it just, again, back to that perfect client. The perfect client is somebody that says, hey, I'm happy to tell you both, because we represent probably about 60 different companies. So we have a lot of choices for people, but we will show you the price difference. But a lot of times that company maybe is not the best for you in terms of claims and taking care of you and your family. And it sometimes also is not the best in terms of when we need to service a policy, add a driver, add a car, or take a car off or whatever. sometimes those companies, we deal with them every day. We know the ones that are good and the ones that aren't so good. And we'd rather, for a few dollars, make sure that it's done right and make sure that you're not frustrated as a client saying, well, geez, I didn't know this $1.27 difference was going to be this much hassle.
Right.
I get it. We all want to save money. I'm not against saving money, but I'm also, you typically get what you pay for, and that's true in insurance, just like it is in real estate or anything else.
Sure. Well, I can understand it's not a one-dimensional question and answer.
Right.
It's multidimensional, and so you're going to give the multidimensional answer, and that's your ideal client.
Right.
I have a lender that I like to refer to because he has an average clear to close time of 8 days, and in real estate business, that's incredible. Now he says you can have any one of these three things, and I wanted to see if you had something similar to say. You can have cheap, fast, or good. Which two of the three did you want?
And that's typically, I would say that in the marketplace, whether you're talking about lending, you're talking about real estate, you're talking about insurance, you're talking about retail, Amazon is a great example. You typically can get two things, but you typically can't get all three. And so we try to kind of focus mostly on quality. We want to make sure that the people that we're dealing with are appreciative of quality, and that's what they want. Typically, our clients, they kind of fit into kind of one of two buckets. One is that they're very conservative in terms of risk. They don't want to be exposed to a lot of risk. They don't want their finances to be liquidated because they didn't have something covered, or they have a lot of assets. Both tend to be more on the conservative nature when it comes to risk. So we spend a lot more time and energy with making sure that everything is covered correctly and that we bring up things that maybe they've never talked to their agent about, or it's never been brought up.
Never considered.
Exactly. So just the lot of little things that marketplace is constant. It's dynamic. It's always changing.
Right.
And we want to make sure that we're keeping the client current, and we're also making sure that we're keeping the policy current with what the client's needs are, because clients' needs change too. Sometimes assets change, or there might be different. Maybe the kids are growing up. They need to either get a car, or maybe they need to get a new place or whatever. So we try to have that open line of communication so we can keep up with them.
Is there a certain period of time at which you would say call me, or let's set up a time? Would it be 6 months, a year?
We try with, again, depending on the client, if they, especially as a commercial client, they typically have a lot of needs throughout the year. They might need a certificate of insurance, they might need a bond, they might need driver updated. So we have a lot more communication with our commercial clients just because their needs are different.
They're already in touch with you multiple times.
They're constantly, calling us, and we're happy to take care of whatever we need to. With our personal line, so like somebody that just say has a home and or auto, or maybe a couple of autos, they typically once a year is we look at the the renewals when they're coming up. We see if there's any need for looking at other companies. Sometimes there is, or sometimes they have hey, I'm buying a new car. Can you look at this car and see if this is something that's going to make my insurance go up? So I'll tell you a quick story of one of our clients, not using their name, but very successful client, got a very successful business, and he decided that he was going to buy a Ferrari. And so he called us and said, hey, I got this Ferrari, brand new. Red, by the way, beautiful car.
Of course.
And
do they come in any other color?
Yeah, exactly. So we quoted it out, found one of our carriers that kind of specializes in that kind of car, and believe it or not, cost less than $1,400 a year. So just a little bit more than $100 a month for that Ferrari. He was covered. And
that's amazing.
Probably, it was definitely a surprise to me. I don't know if what he was expecting, but the new cars, even Ferraris, have a lot more safety things involved in whether it be car avoidance or Sometimes even making sure that they park themselves and all kinds of different things. So those things help a lot.
Well,
So.
I'm guessing too, everybody else on the road is very concerned about don't hit the Ferrari.
Yeah.
Whatever you do. You
That's
can wrap
right.
yourself around a tree, but don't hit the
Ferrari.
Ferrari.
Yeah, that's one of the things that when we're talking to people about their property damage, especially on their car, is that you're seeing, we're here right now in Lorain, Ohio, and kind of in the center of the county, kind of a thing, and there's more and more cars that you're seeing that are high-end cars. So you're seeing, more Lamborghini, you're seeing some Bugattis, you're seeing, things that are, way above the $100,000 threshold to replace. So I try to always let people know is like, I know that maybe 10 years ago or 15 years ago, you didn't have to worry about those things. You do now, because to your point, I don't get to pick the person that I have an accident with. But when you go to North Olmsted, for those of you that go out towards, Great Northern Mall and things like that, there's now several car dealers that's all they sell. We've got a Lamborghini dealership that I don't know they're open yet, but will be open. I think there's another, trying to remember the name of the dealership, but all very high-end specified dealerships. Porsche is over there.
Aaron, could you talk to us about how much should we be concerned about the rating of an insurance company? Because you have multiple ones to choose from. How much should we be concerned about that?
Yeah, that's a very good question, and something that I wish more clients would ask us. But a lot of times they're very focused on rate. How much am I going to be charged? But when we have the opportunity, which I always love to be able to answer this question, is we talk very much about what's called AM Best. So AM Best rates insurance companies. They rate their financial health, their ability to pay claims. They'll even get into speed, how fast they pay claims in that. But the depth of the portfolio, which is something that is really important when it comes to insurance companies, is how healthy are they? There's a lot of names that most probably people would hear, and if I said them, oh yeah, I've heard of them. But I always like to then back that up with a rating and see where they're at, because sometimes you have insurance companies that maybe are pretty well known, but they're not, say, as strongly rated as others that aren't as well known. And part of the reason could be that they're spending a lot of money on advertising and marketing, getting their name out there to try to get more customers. But that's not always, as we all know, it's not always the best path towards financial health and stability. So I like to know what I'm buying. I like my customers to know what they're buying. And financial stability, to your question, Tom, is extremely important. And if I'm only paying a few dollars more and I've got a highly strong rated AM Best company versus one that's low rated, I at least want to know what that cost differential is. Let's put it that way.
I see. Okay. So that is very significant, what you said there. That is very interesting. I had a friend that was a CLU when I back in a land far, far away, California.
Right.
And I had a situation with, I have to leave some details out to protect the guilty and so on. But he kind of got somewhat involved, and he was a little bit intense about something wasn't being done right. And so he started teaching me a lot of things. Being a CLU, I think he knew quite a bit, right? And so I learned quite a bit from that, and we ended up sort of rectifying and steering away from where we had put some resources and moved in a different direction because of that. So I really appreciate it. Well, all that information I learned when I relocated to Washington State. So this is my fun little story. This young man, he looked like he was fresh out of something, and wet behind the ears and so on. And he came to my house. I answered an ad on Facebook or something or somewhere. And he came out, and he was going to help us see if we qualify for this insurance and so on. And so I thought, I wonder if he knows anything yet, And so then I started thinking back to the things that my friend Richard had told me about the CLU. And so I asked him some softball questions, and then eventually I asked him a really hard question, and I was just waiting to, I knew he couldn't answer it. I knew that already. He was just fresh out of, insurance school, I guess, the training. And so he said, Mr. Mayhew, I don't know the answer to that, but I will get you the answer. And it wasn't 2 days, and he got me the answer.
Good.
And I that's it. You're my guy.
Yeah.
And
good
we
for
did
him.
a lot of business together over those years. And I appreciate it. And I feel very much that. So he was honest. Like, that's what I was looking for.
Yeah.
It's okay if you don't have the answer. If you're a young guy, like, how could you know all that stuff?
Exactly.
But if you're honest, then I like you a lot.
Yeah, that's a big difference. Sure.
Yeah, and I referred all my clients, his direction, because I knew they'd be well taken care of. So, and I feel the same, with you as well. That's, of course, you know as much as the CLU and probably then some.
Wow.
Just because of years of the business,
we're all
right?
learning. We're all trying to hopefully stay ahead of
Sure.
the information that's coming at us on a daily basis. So we do
Sure.
the best we can. So.
Well, I love the Ferrari story. Do you have any other good stories you'd like to share? Like, it's a strange thing in a sense that it's a win in insurance, because there might have been a loss
Sure.
involved in the win, but
Sure.
hey, the insurance came through, and that's what it's supposed to do.
Yeah, I think, and maybe kind of coming around to more your neck of the woods, which is real estate. So we actually have a lot of investors that we work with.
Okay.
And the funny thing is that most of them are not actually from the state of Ohio. A lot of them actually are based in Miami, typically. They are buying real estate in Ohio, but they're not from here. And a fair amount of them actually aren't even from the country. They're actually outside of our country. Okay. So, and people, a lot of times, I've been in real estate since I was 15 years old.
Wow.
And I was a real estate appraiser for 24 years.
Wow.
And now find myself in the insurance part of the business. But I've always been fascinated by real estate, and I always loved people like you, Tom, because I call it the front line. So you guys are on the front line. You guys are the one facing the market every day, dealing with clients, dealing with the ebbs and flows of the market. And really, to me, I always love talking with knowledgeable people like you, because it's like keeping your finger on the pulse of what's actually going on.
Right now.
The appraisers, we were the guys that analyzed all the data post-mortem, as it were. Right. And that's one thing is like, well, you can come up with a number, but the people that were actually doing the work, you being there in the marketplace, that was, for me, was very, very informative. And for investors, that stuff is extremely the information is very important. So I've tried to keep myself as much as I can connected to that pipeline. And when you look at the market, back to what we're talking about insurance, is that a lot of times with investors, it doesn't matter if it's one property or 10 or 20 or 100 or more. We can certainly help them, but part of the thing that they do when they're approaching us is they're doing the same thing that a lot of my clients with just one home do, which is how much. So that the question starts with how much, and we are always happy to get to there, but I don't think, especially for an investor, it necessarily should be the first question. Do I think it's a question? I think it's within the top 3 to 5. Okay. But I think I'll give you an example, because I think stories, kind of help make the point.
They do.
So we had a storm, as most of you know, in northeastern Ohio here just a few weeks ago. Right. Okay. And we, just out of this office, probably fielded about 283 claims calls. Okay. So people that had water in their basement, or that's mostly what it was. And so when an investor, when they typically buy properties, a lot of times they'll buy within a city, within an area, or whatever. And what you're really doing is you're pooling risk. So when you think about it, again, from the risk game, what you're doing is you're putting a lot of risk in one place. And what's the greatest exposure of risk of real estate? Well, things like fire and tornadoes and wind and hail and those type of things, as well as liability. But the most claims that we see typically are weather related. So when you think about it, weather is out of all of our control. Okay. Yes. God knows what's going to happen, but we don't know. But when you pool your risk in one area, here's one of the things that investors should always think about. One of them being is that if you have individual policies, you have individual deductibles. So let's say in the example of, I've got $1,000 deductible. Yeah, but if you had 10 properties, you now have $10,000 deductible. And if it's a hailstorm, it's not going to hit one of your houses in one area. It's probably going to hit all 10.
I see.
Another thing that should be asked, I think is a very important question is, do you have replacement value or do you have what's called actual cash value? If you have actual cash value, yes, it's cheaper. However, those claims, when they come in, are all settled on what's called a depreciated value. So we'll go back to the the example of somebody that owns 10 properties, and let's say they had, as an example, 10 roofs that were affected by hail. Well, all of those roofs now at ACV, which is actual cash value, are going to be depreciated. And let's say they're all closing in on 15, 16 years old.
Yeah.
Well, 15-year-old roof of a 25-year-old roof is more than 50% depreciated. So if those roofs cost an average of, let's say, $10,000, well, guess what? That 10,000 times 10 is now $100,000. You first are paying $10,000 on the front end for the deductible. Then you're paying another $50,000 on top of that for your share of the depreciated value. So that what could have been a claim on one centralized policy, because that's what we like to do, is put all the properties in one policy, one deductible, and then we can talk about whether or not the investor wants to share in the risk or wants replacement value, because yes, it is a little bit more expensive, but when you have a claim like that, it's not financially devastating, because most investors don't want to have to shell out 50 or 60 grand on a single event.
Right.
But that's the kind of difference and the kind of thing that we like to talk through with people, whether it be a homeowner that only owns one property, or if it's an investor that owns 10 or 100 or more properties. It's your money, you spend it how you want, but I want to make sure you know what you're buying, because unfortunately many agents approach it as, I just want the next client. So what they'll do is they'll just say, when they hear, oh, I want it cheaper, well, they'll give them a cheap policy, but they never know exactly what they've got until a claim happens, and then you're arguing with an adjuster. The agent has no control over what that adjuster decides.
Right. Surprise, surprise. Right. Well, it seems to me there's lots of reasons to. Well, I kind of wonder if you have like a sort of a cheat sheet of questions, or or like priorities when you go talk with your insurance agent. What should you, and if you had something like that, we'd be happy to put it in the notes or what have you, or click here. And,
be happy to get that for you, and for the people that follow you, Tom.
That's great.
Be happy to do that.
No, I think that's a tremendous, be tremendous value to people.